Good morning, everybody. Happy National Beaver Day. Did you guys know that's a thing? Had no idea until the Googles told me. You guys hear me okay? Um, Discord seems to be doing well today. No craziness going on. I like it. Can't say the same thing for the markets, huh? Wow, they're going nuts. A lot of movement. You guys should have been careful what you wished for when you talked about crude oil being too slow. Good morning, Steve. Good morning, Bob. Guys, we're going to do it today. We're going to have some fun. We're going to look for some patterns, talk about some advantages. I'm just going to say right from the get-go, you have to decide whether or not the market is too fast for you to trade. I know it's looking crazy in there. I chose to stay out of my usual NASDAQ. It was just I couldn't react in time. You'll have to make that decision, guys. If you have time to do your chart reads, if you have time to get your stops in the right spot, if you have time to put your entries where they belong, then by all means trade your rules. Follow your rules. If it's moving too fast, guys, there's no shame in just relaxing, or if you're on sim, right? Do whatever feels right for you, guys. I don't tell you what to do. But I will tell you that every morning, it's also not filling properly. So it's not filling properly, probably, Andy, not because of the gap, but because of the speed. There's a point where NinjaTrader can't keep up. If you've ever accidentally traded FOMC, good morning, Miss Trina. If you've ever accidentally traded FOMC, you'll see a market that's going up and you'll go long and you'll never see a down bar, but you'll still get stopped out because it's so fast that it can't even register. And that's probably what's going on. Isn't that funny, Gary? I opened up the internet and saw that and I was laughing. International Beaver Day. So guys, remember, and Trina says I'm staying on sim. Again, I won't tell you guys what to do, but if you can't do it fast enough, it's all right to take a day to watch. There you go, Andy. So every morning we come to news, guys. I come to Forex Factory /com or /calendar, and I just look for high impact and low impact news, medium impact news. I'm looking for red boxes because red boxes tell me that there may be some sort of reaction that could make the market a little crazy. Clearly, everybody understands that the market's having a reaction right now to ongoing news, and you're seeing it in the speed of the market. They'll settle down. They always do. But we're looking for them here. And today, Monday, April 7th, there's nothing. It's all low impact, really all the way until 2 p.m. on Wednesday, FOMC minutes. So this isn't going to affect me too terribly much, so I'm going to go look for my patterns. Cab, you took a trade on the NASDAQ that happened to you, and it was moved over to crude oil. And that was it moved over. You took a trade on the NASDAQ. Oh, and it was too fast, filled weird. So you just went over to crude. I took a few on the NASDAQ this morning. Rules met. I think I was batting about 60%, up $300 or so. Just no follow through. So I said no more. Guys, everything that I talk about is going to come from the Nexgen page. All the answers, all the rules, all the patterns, everything is right here, right in the trading plan section. Understanding the indicators, understanding trend and momentum, termination conditions. Guys, everything that we talk about and everything in this trading plan gets pieced together to create what we call a high probability trade. And a high probability trade is defined when each indicator on every chart agrees with the rules for the trade. This is what we talk about in this room for the first hour, because the high probability trend trade, when you learn to follow the rules, is a trade that typically wins 70 to 80% of the time. And this is a trade that creates a lot of confidence through that memory of success. But the most important thing that the high probability trend trade does for you is, guys, it's going to teach you to read your indicators. It's going to teach you to read your charts. And becoming a chart reader should be your goal for the first 20 or 30 days with Nexgen. Being able to look at your charts and just understand what they're telling you. The rules for a trade are nothing more than a description of a pattern. And that pattern has been proven to win more than it loses, which means that when we talk about the rules for the high probability trend trade, we're describing a pattern that is repeatable, that's testable, that you can verify, that you can validate, and ultimately that you can trust. The high probability trend trade is the trade that teaches you to recognize the individual pieces of the pattern, the individual rules, the individual advantages. And what you're going to realize with just a little bit of time with us here is that about 90% of your day is spent reading indicators. About 10% of your day is spent actually trading, actively trading. The time in the market isn't overwhelming, and it's funny because when I talk to people that don't understand what I do, they're like, so what do? Do you just, buy it, hold it for a couple days, and then get out? I'm like, no, I hold it for 60 seconds, and then I'm done. I'm out of the trade. And that's one of the great things about futures. But chart reading is going to allow you to look at your charts, see some advantages, understand where the market is likely to continue, and that continuation point becomes an entry for the high probability trend trade. Where the market is likely to go is going to help you with targets, and where the market is likely to stop is going to be a giant red flag that keeps you from trading into that next area. Yeah, gold has been crazy. Everything's been crazy, guys. We knew it was coming, right? Day traders are the funniest group of people because we can look at the world and say, oh my gosh, it's chaotic. And then we wake up and open up our charts and we're almost surprised that the chaos carries over to the markets. But guys, that's just a part of it. The high probability trend trade, it's 3 rules. That's it. 3 rules, even more so. It's 3 advantages, but the rules describe the advantages. So the first rule says you got to have strong triggers. And that creates the advantage of momentum. And we're going to look at momentum all by itself, individually, being able to identify it and really insisting on it. And then once momentum is in play, once we have those strong triggers, rule number 2 is going to have you making sure that there's no areas that are likely to stop the market. We call those termination conditions. And if there's none, we're going to have the advantage of a clear path. So this classroom is designed to really focus on momentum and path. And I remind you guys every day that once you understand these 2 concepts, once you understand a market that's likely to continue in the direction of the trend, and you're able to identify that, and you understand when none of those termination conditions are present, when you have a clear path. These 2 advantages are the core. They're the base. They are the foundation for really everything that you do with the software. And once you understand these 2, you actually have enough knowledge to build a very consistent trading plan. Rule number 3 is designed to put you into the market. It's an entry rule. And that entry rule is going to have you in the market where the market is most likely to continue with the trend. Rule number 3 is specific to trend trades. One of the things that I do in this room is I try to simplify everything. I may even try to oversimplify everything. So these 3 rules happen on only 2 charts. You engineers you're quaking. You're like, oh my gosh, that can't be enough rules to be successful. That's not enough charts. There's not enough going on to create success. But it really is, guys. The 2 charts, you're going to have a large chart. It's a slow chart. It's a very broad stroke of a brush. It's actually very difficult to see change on a large chart. But it's going to define direction, momentum, and areas. Your first 2 rules, the advantage of momentum and the advantage of a clear path, come to you from the large chart. Specifically, the first bar on the large chart is enough to let you know when the advantages are in play. Your small chart is your entry chart, and your small chart takes that broad stroke of a brush, that 1 bar, that sets us up and gives us 66% of our advantages. And it refines it, and it shows us some change that you can't see on that large chart. And this is how we're going to pinpoint entries. This is how you're going to be able to see precisely where the market is most likely to continue and the direction with the momentum, not into areas of the large chart. And this small chart allows you to reduce risk, and it really will help you increase your profit potential. And rule number 3 is specific to entry, and it's specific on the small chart, and it should only be looked at when the large chart says go, says, hey, let's look for that entry. We've been using these two charts for as long as I can remember because they're a reflection of who you're trading with or who you're trading against. The large chart is the big crowd. These are the men and women with deep pockets, a lot of influence. And these are the people that establish the trends, that say, we want the market to go up, and the market goes up with their wishes. And they say, let's flood this market with orders and really create the momentum. And they do. And they also react at key areas. They've got these numbers in their head that you're going to see on your large chart in the form of Fibonacci and one-to-ones. And guys, the large crowd leads the way. They set the tone. The small crowd, your small chart, these are the fighters. And they still have a lot of money and a lot of influence. And they're capable of creating these little retracements, these little pushes down when everything that these guys want says up. Your small crowd typically fails about 70 to 80% of the time, and this is just a metaphor. Your entry rules are designed to pinpoint where their failure is most imminent. And by using rule number 3 on a smaller, faster chart, by refining and not going against that large chart, you'll be able to enter the market right where the market is most likely to bounce and continue in the direction of the trend that the large chart wanted. So when we get going in this first hour, the whole goal for an entire hour is to learn the trigger line and Fibonacci rules for when it's okay to trade. I use that phrase, okay to trade. It's okay to trade when my rules are met, because my rules have been proven to win more than they lose. And then, of course, the other side of that is it's not okay to trade if my rules aren't met, because I'm lacking the advantages that I need. I don't have the pattern that has been proven to win more than it loses. And what a valuable lesson for brand new users. And you'll see in this room that the most successful traders that you see in this room are all of their trades look the same, or there's 1 or 2 trades within their trading plan, and they all seem to be managed the same. And when you see somebody post in the room, you're like, oh, Wayne's posting in the room. I bet that chart has momentum. You know, there's Pete. Pete's probably trading from a strong bottom with all the momentum. There's Bob. Bob's getting in and out of 72 trend trades in one move, making all the money because he's insisting on momentum and path. And you'll begin to recognize that there's a very, very specific recipe. You have the ability to simulate. There's no reason and there's no mandate to trade a live market if you're not ready. So simulate and practice. And then the first step to becoming a confident trader ASAP is post in the room. If you're looking at the chat box right now and you're still kind of new with me, you see guys like Bob and Pete. Pete says, hey, Mark, check it out. I'm going to click on Pete's link. And Pete says, Mark, let me show you what I see, and let me tell you how I'm reading the market, what my indicators are telling me. And Mark, if you would just do me a favor, am I reading it correctly? And then there's my entry, and it fits my rules, and there's my first exit. And because of these advantages, I held this one all the way to the second exit, and he's already $480 over his daily goal by 9 a.m. And guys, this is what you can do every day. And by the way, Pete, absolutely perfect. But every time you post in my room, it's a private session. Tell me what you see. Tell me what you did. Show me where you did it. Brag a little bit if you're doing it well. And I'll give you feedback on everything. If you say, I have momentum, but it turns out you don't, we'll discuss momentum and how to identify it. If you tell me that you have a clear path, but you don't. We'll talk about how to identify a clear path and of course how to identify a termination condition. And if your entry area, maybe there was a way to make a little more money, a little less risk. Guys, we'll talk about all of it. So make sure that every time you post in my room, tell me why. And those whys become your recipe for success, guys. And those whys become your recipe to avoid the failures that going outside of your rules creates. So post in the room. The people that post the most typically get to where they want to be the fastest. And there is no such thing as overposting, Pete. No such thing as overposting. If you have a question, get it in the room. I want to answer it. We're going to simplify today. We're really just going to focus on this high probability trend trade first. Because everything that you learn in that trade, the indicator reading that you learn to do through that trade is what opens the door for the next trades, guys. So really focus on that foundation. You just have to learn what looks you're going to commit to. And when I say what looks you're going to commit to, you need to be able to identify momentum. You need to be able to recognize a clear path and then define an entry. And you learn these looks until they become easy. You learn these looks until the market appears to slow down. And that's where the second piece of becoming a confident trader, ASAP, comes in. Tracking your real-time performance in a spreadsheet. I give this spreadsheet out every day because I update it almost every day. And there's 4 tabs on it. The first tab is the basic rules. So when I talk about being able to understand and recognize these patterns, here's your strong triggers, like 50 pictures. And each of these pictures are annotated to tell you exactly why it's strong triggers and what it means to you. And then I think that if you're committed to rules met, you need to understand what it looks like when they're not met. And there's weak triggers. And then there's your clear path, rule number 2. And there's what it looks like when rule number 2 isn't in play. And guys, I want you to see something. Look how far down those termination conditions go, all the way down into the 80s. Because this is the most broken rule. A little bit on entries there. There's client trades. Over 400 pictures of you guys doing great things with the software, so much so that I put them in here for other people to study. There's defining your entry, both long and short, stuff on management, patterns that repeat themselves. Guys, pictures, not trades, are typically the easiest way to get over that initial learning curve. Taking pictures of everything, talking on your charts, this is what I see, and then getting feedback on what you see. So as you're taking pictures, start to fill up your section. And that's what the build your plan is. The pattern that's going to get you into the market, flood the green section with it. As you begin to read your indicators a little more accurately, you're going to change up the management plan. I'm going to hand you a management plan that's very easy, very simple, very mechanical. You're going to grow outside of that as you grow with the software. And then you're going to start to see things. Things are going to jump off the page at you, certain patterns. And you may or may not turn these patterns into part of your trading plan beyond the very simple approach that I'm going to give you. And then finally, there's trade tracking. This is where every picture that you post in the room, you're going to talk about your advantages. And then every picture that you post in the room, I'm going to give you feedback. Sometimes you'll be like, oh, I didn't see that. Sometimes you're like, yep, I knew he was going to say that. But the feedback is a big part of recognizing the patterns that are bringing you success, the patterns that are taking that success from you. But I think most importantly, the feedback is going to help you recognize patterns in yourself. Everybody, as they learn this software, it feels like this for a minute. It feels like drinking from a fire hose. I know that it does. You're like, oh my gosh, I have momentum, maybe not the path. I don't know about the entry area. I'm not really sure what to do. And you're going to lean towards something. If you study the feedback every morning, you're going to start to see the things that you lean towards, the great things, like maybe you never trade without momentum. But most of us, because we're human, we fall outside of the rules inadvertently. And if you post in the room, I'll help you identify which rules seem to be giving you trouble. Some people trade directly into termination conditions. Some people get so caught up in their trade that they miss multiple divergences. Some people jump in early. Some people hold way too long. We'll identify your patterns, and if they need fixing, we'll talk about a way to fix it. And that's our morning. We're gonna learn the rules. You're gonna practice. You're gonna post in the room. You're gonna ask for feedback, guys. That's the magic of what we do. I'm gonna tell you what you did right and wrong, and if it's wrong, I'm gonna teach you how to fix it. And if it's right, we're gonna celebrate it. I love to celebrate. I'm a happy kind of guy. You've got to simplify. You've got to keep it easy. Don't overthink it, guys. This is a marathon. You don't have to be in your graduate studies 2 weeks into your freshman year. Learn the basics. Get to where you want to be. Learn the looks. And then by the end of this first hour, you will have received everything that you need to be successful with the software. You will have all the rules. You'll know what they look like, how to study them. You'll have a place to study them. 15 hours of feedback every week. You'll have a plan that has been proven to win more than it loses. You will have everything you need by the end of the first hour, with the exception of the experience to make it easy. And that's going to be on you, taking those pictures, asking for help. Let's get going, and let's talk about the indicators first to make sure you understand. Do I have any newer people in here? Anybody that's just getting going? Maybe. If so, this is your classroom. Ask questions. Both charts have trigger lines, small and large. Smalls are solid lines, large are dashed lines. Small are fast, large are slow. All you need to know is that these are small and these are large, and these are small and these are large. And when they're going up, they're green, and when they're going down, they're red. And you're going to use trigger lines in everything you do. You're going to use them to define momentum. You're going to use them to define termination conditions. You're going to use them to define entries, guys. Triggers are a part of everything, so know the difference between smalls and large. And then both charts will have areas. And all of the areas have names, and they'll have a different role depending on the chart. On the large chart, these areas are where the large crowd makes decisions, guys. These are the ones that could stop the market cold. On a small chart, we're going to use some of these areas for bouncy points, for entries. They all have names. There's divergence highs. It's a magenta line that prints if there's a loss of momentum. There's a divergence low. It's a cyan line that prints if there's a loss of momentum. There's Fibonacci resistance, the red lines, Fibonacci support, the blue lines. There's even yellow one-to-ones. These are like fibs in the moment. And they'll print on and off throughout the day. Then you'll also see a midband. And the midband is just exponential moving average, EMA for you kids in the know. And it's just going to roll through the middle of your chart. But know the names. You don't have to know the math that creates them. And we're going to use these indicators to identify advantages so that we know that it's time to take a trade. And everything starts on the large chart. Large chart leads the way. That needs to be on coffee cups. And the large chart must have strong trigger lines because we're going to insist on the advantage of momentum. The only way to have strong trigger lines is to trade with the trend. Green is up, red is down. How easy is that? Unless you're colorblind. But if you're colorblind, let me know. I'll teach you a trick. And this just lets you know which direction you're looking for rules to be met. We've all heard it. If you've spent a half a second researching trading, you know that the trend is your friend, guys. And the trend is established by the large crowd. We're going to go with it. In an uptrend, large and small triggers must also be green. In a downtrend, large and small triggers must also be red. If your colors don't match, if you don't have 3 greens or 3 reds, you don't have strong triggers. A little safeguard as you learn the pattern. Strong triggers means that there's a separation between the small and large. In an uptrend, the small triggers are up and above the large. The large should be wide, angled in the direction of the trend. And it's that gap between the two. Picture scissors that are open, ready to cut. This is my strong trigger look in an uptrend. In a downtrend, small triggers are below the large triggers. Large triggers are wide. Once again, those scissors are open. That space is there. This is strong triggers in a downtrend. And when I have strong triggers, when the scissors are open and the colors match, the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum should give you a warm, fuzzy feeling. Odds favorable momentum is what you're going to hear in this classroom all day. You're going to see it annotated on charts, OFM. And when you have odds favorable momentum, when you have strong triggers, that market is likely to push in the direction of the trend. This look is what lets us know that key Fibonacci areas have the potential to break. Odds favorable momentum. On a large chart, it's just the trigger lines. But you'll see these bars sprout tails or wicks. That's all that action on a smaller, faster chart. With strong triggers up, each of these tails is a potential entry on a smaller, faster chart, whether it's buying support or selling resistance. And my favorite thing about odds favorable momentum is it'll cover some of the mistakes that we tend to make as new users, and it'll open the door for utilizing exceptions as you grow with the software. So know the difference between strength when the scissors are open, when the space is present, and weakness when the small triggers work their way back inside of the large triggers. Weakness lets me know that anything can happen up or down. Language becomes important, I think. Anything can happen. You're going to see these triggers annotated, ACH. And when you have anything can happen triggers, this is where retracements tend to happen from the middle of nowhere. This is when key Fibonacci areas are more likely to hold. And if we just go to the S&P, this is strength. Let's take a picture. Let me show you just how easy the look is. This is weakness. The scissors are closed and the market reversed from nowhere. This is strength, separation between the two, and you can see that area after area after area, the market continues up right until weakness, right at a key Fibonacci area, and that's where the market retraces. Strength pushes down, weakness at a key area, giant retracement. Strong triggers has nothing to do with Fibonacci. Strong triggers isn't anything to do with price. Strong triggers is nothing more than a comparison of the large and small triggers, guys. Can you give me a Y in the room if you're good? Strength versus weakness. Know the difference. One's an advantage, one relies on hope should you choose to enter the market. Once you have strong triggers, once that momentum is present, then you're going to look for termination conditions. You're going to make sure you're not trading into an area likely to stop the market. Bob, thank you for your feedback. Somebody's got to, right? What's a termination condition? It's an area that could stop the market, that could create an untradeable bounce, that could reverse the market. Guys, it's a horizontal line on your large chart. It's those areas. It's a divergence high. It's a divergence low. It's Fibonacci resistance, support, yellow one-to-ones. And it takes a comparison of the area and the triggers to define it as a termination condition. And I want you to just say to yourself, write it down, text yourself. The areas on the large chart, support, resistance, one-to-ones, divergence highs and lows, these are where the large crowd are most likely to make decisions. These are where the people in control are most likely to make decisions, where they're likely to enter, to exit, to take profits, to fight one another. So in order to define a termination condition, you're going to allow the large crowd to get to the area. And we're going to call that price reaches. Price reaches. These dynamic Renko bars reach resistance. These down bars, dynamic Renko bars, price bars, they reach Fibonacci support. And when price reaches resistance, you're just going to ask yourself, where are my triggers? We're done with price. Price has no basis on anything anymore. It's all the trigger lines. So where are my triggers? And if they remain below resistance, resistance is a termination condition. It may reverse the market, but it may also create an untradeable bounce. It may create a fight between the buyers and sellers that has it just kind of seismographing right there. And I just made seismographing a verb. Or it could break. And here's the one thing that you have to accept is you'll never know. You'll never know whether it's going to reverse the market or whether it's going to break. So we trade the pattern. And the pattern is if price reaches the area and the triggers remain below, more often than not, that area stops the market, which means your advantage is gone. And if it reverses the market We're going to call that a strong top. And a strong top is rule number one for almost every trade beyond the high probability trend trade. And when price reaches support, you ask yourself, where are my triggers? And the triggers remain above. And you say, wow, it's a termination condition. I don't know what the reaction is going to be. Let me sit on my hands and do nothing. And if it reverses the market, it's a strong bottom. And that's rule number one for almost every trade outside the high probability trend trade. So if these areas reverse the market, you're going to look for opportunities the other direction. If they break, you're going to have to learn to be a little patient, because the first thing that happens every time price reaches a line, your triggers are going to be below resistance if it's resistance. And it may be a termination condition for a moment, for an hour. I don't know which one it's going to be, neither will you. So your highest chance of success as a day trader is to wait for the reaction, to see what the reaction is. Don't feel compelled to predict the reaction. So the first one here is just do nothing. It's your do nothing look. This is your 90%. If your small triggers and your large triggers get beyond resistance, resistance is now considered broken. Your path is now considered clear. Your path will remain clear until you reach the next level of resistance. And then it starts all over. But with this momentum, separation between the small and large, with the path now clear, you'll be looking for entries for that highest probability trend trade. And once you can tell the difference between termination and clear path, it opens the door for the next trade, for the second trade on the plan I'm going to give you. And this is called a 50-50 trade. And 50-50 is just a description of where your triggers are. Remember, once price reaches the area, we're done with it. The triggers tell the story. So if your small triggers smash through the area with odds favorable momentum, with strong triggers, but your large triggers are kind of lollygagging behind a little bit. That slower moving average can't get above resistance just yet. Guys, this is when an area has the potential to break because of that momentum. This will actually probably be the majority of your trades, but because the path isn't clear, because you're using those advantages, that language, I have momentum, but my path isn't clear, it sets your brain to insist on the best advantages of momentum everywhere you can find them, to make sure that your entry is a low risk entry. And guys, you're just going to manage these assertively. And if the market's going down when it reaches support and the triggers remain above, do nothing. Wait for the reaction. See what happens. And then it may have the potential to break. You may find an opportunity, or it may break completely and your path is clear until you reach the next area. And that's one of the things that happens a lot, is there will be times when your path isn't clear because the areas are stacked. Support, into support, into support. That's your time lapse there. And this is 90% of your day. 90% of your day is doing nothing. It's okay to do nothing. It's encouraged to do nothing if there's nothing to do. But the futures markets trade billions every day. You have to capture $400 a day to be in a six-figure income based on your trading. And let's just look at terminations for a second. I'm going to back it up a little bit. There we go. We'll start right here. This was 8:58 a.m. this morning. Right off of Fibonacci resistance, and the market pushes down directly to a divergence low, to the tick, even with odds favorable momentum, and there's an untradeable bounce. All the way back to one-to-ones, and all your triggers remain below, and it continues down. And then the market almost breaks, not quite, goes all the way back to the mid-band and to support, and back to the mid-band, and it continues down. And you'll notice these wicks, these tails, these price bars. Notice how they dance right at the key areas? That's the large crowd fighting, making decisions right at the key areas. Support breaks, and it behaves as resistance. You see it twice. Off of support, weak triggers, all the way up to resistance, weak triggers. The market comes down once again. There's your reaction off the key area. There's your reaction off the key area. There's your reaction off the key area. Weakness at a fib comes all the way to resistance, comes back down with that potential to break, maybe an entry. Weak triggers, straight to resistance. Weak triggers at a divergence low. Guys, it's putting on a clinic for you. And once you learn the simple recipe, price reaches an area, triggers remain above, do nothing because there may be an untradeable bounce, guys, it opens the door for a huge level of success. And as you come through, potential to break and more entry opportunities. Weakness, weakness, potential to break, entry opportunity. Weakness, there's the retracement. Where did it retrace to? Directly to resistance. So can you guys give me a why? If you're good with it. When price reaches an area, it's okay to do nothing. It's 90% of your day, guys. It's the most broken rule among new users. That's it for large chart. Large chart is using the areas to define where the market may stop, may bounce, may reverse. Your small chart has a termination condition as well, and that is 3 divergences in the same price range. It may terminate the trend. And guys, these 3 divergences give you a heads up of the change that you can't see on the large chart. Large chart may have odds favorable momentum, but if you see 3 divergences print on the small chart, it lets you know that things may be changing. This is the only termination condition that I accept on a small chart. Because if my large chart has momentum and my large chart has a clear path, it's my job to go look for an entry to define where the market is most likely to continue. And the only way I won't do that is if I go to my entry chart and see 3 divergences. But if I don't, I'm going to use a limit order to buy or sell a pullback in an area inside of triggers. I'm going to use a limit order. I'm going to wait for the market to come to me. And I'm going to wait for that market, let the small crowd fight. And fight all the way to an area, to a fib, to a mid-band, to a yellow 1-to-1. And I want that area to be inside of triggers. And guys, that's the recipe. Pull back to an area inside of triggers. Because triggers define where the retracement's most likely to occur. Price returns to large triggers. Big chart, little chart. So on your entry chart, your little chart, you have the large triggers from the 5-1. These are native. You'll use them versus the small triggers to define momentum. And you also have those large chart, large triggers. And all this does, it says, hey, there's the small crowd fighting. Here's the pullback. This is the range where the pullback is most likely to go. And if you allow those large and synthetic triggers to be one on top of each other, that range gets considerably smaller. The accuracy goes up dramatically. We call these favorable large triggers. So if you're brand new and you're looking for that highest chance of success, guys, using the phrase pull back to an area inside of favorable large triggers is your highest chance of success. The least amount of risk, the highest accuracy. So we're going to define an entry. We're going to use a pullback to an area inside of triggers. Sorry, I'm sending my wife a text to kill the heater. My office is about 1,000 degrees. Once the rules are met on the large chart, when I'm working with the advantage of momentum, when my path is clear, in this case, everything is screaming up. Everything is perfect to the upside. 100%. I have all the momentum. I haven't reached the next area. My triggers have cleared these areas. And in order to get down to my entry, in order to get to that area where the market is most likely to continue, I need a reversal bar. I need my small chart to give me a down bar when everything on every chart is going up. And the down bar signals the beginning of the retracement, the pullback, the fight. And I know that price tends to return to large triggers. So I have large triggers and I have synthetic triggers, the 2 sets of large. And from the highest line of the large triggers to the lowest line of the triggers, guys, this is where the market is most likely to retrace. Not guaranteed to retrace, not giving you a promise and a pinky swear that it will, but this is where it's most likely to happen. And by understanding that, you can say, all right, somewhere inside of this retracement zone is where the market's most likely to continue. And that's areas. Fibs, mid-bands, or yellow 1-to-1s. Triggers define the retracement. Areas define where it's most likely to bounce. So we're going to take that big box from the top to the bottom and we're going to turn it into a small box from the highest area inside of triggers to the lowest area inside of triggers. And this is what I call the window of opportunity. Because this is where the market is most likely to bounce in the direction of the large chart trend, momentum, clear path. This is where the small crowd is most likely to fail. And because you're going to go back and study that and see that and trust that, you're going to have the courage to activate a limit order. You're literally going to wait for that market to come to you. And you're going to wait 2 ticks above the highest point inside of those triggers, because your large chart has nothing in the way to stop all that momentum. We don't expect the small chart to get too terribly low. And that's it. That's all you can do. This is the extent of the control that you have over the market. You can control whether or not you have momentum by insisting on large triggers. You can be 100% in control of whether or not you trade into an area that may stop the market, and you are 100% in control of where you put your limit order to try to take that entry. And that's what's pretty amazing, because if they come to you, if you get that entry, you are in the trade with all the advantages, and you're just trading a pattern that's been proven to win more than it loses. And guys, this is your entry. And all of this pullback on the small chart is that one little tail or wick on the large chart. So learn the recipe. When the large chart rules are met, wait for the reversal bar. It's not your entry. Define where the retracement's most likely to go, those large triggers, not your entry. Define where it's most likely to bounce. Create that window of opportunity. This is where the trend is most likely to continue. This is where the small crowd is most likely to fail. Your limit order goes 2 ticks above it. And in futures, we don't care if the market's going up or down. Everything says down on the large chart. The path is clear. The momentum is strong. Wait for the reversal bar. It's not your entry. Define where the retracement's most likely to go. Not your entry. Define where it's most likely to bounce. Your entry is 2 ticks below that area. And guys, once you define where the market is most likely to continue, where the small crowd is most likely to fail, what you're doing is you're also defining where the market shouldn't go if this is going to be part of that 70 to 80%. And you're going to use that idea where the market should not go beyond the retracement zone, beyond the areas most likely to create a bounce. And this is where your first stop's going to be. Because one of the things, and man, pay attention to this one, because this one kills so many people in trend trades. Once you get to what I call the wrong side of the triggers, once you get above the large triggers in a short trade, once you get below the large triggers in a long trade, you are where the market should not go. Your advantage from rule number 3 is no longer in play. And once you get to the wrong side of the triggers, you don't know if, when, or where that market is going to head back in the direction of the large chart trend. So advantage gone, be willing to take a stop. Anything that wins 70 to 80% of the time will lose 20 to 30% of the time. That's how math works. So you've got to study this look, to develop this trust, to put your stop in the right spot, guys. And you're going to do that not by taking a million trades and hoping for the best. You're going to go back, and when the rules are met on the large chart, you're going to circle those tails. Whoops. So if I have odds favorable momentum and I have a clear path, this market is screaming today, I'm going to circle a tail. And if I see the rules met, I'm going to circle a tail. And guys, these tails are the pullbacks, the potential entries. Both of these are good looking looks. So we're going to come back to a small chart. And let's go find that circle. And there it is. It's a pullback directly to support inside of triggers, but 3 divergences may have kept you out. Let's go to the other one. It's a pullback directly to the mid-band, right in the retracement zone. And does everybody see how the market continued up? Guys, this is your pattern. That's it. Trina, did you catch that one? You were quick to say yep. But you can go back and you could just keep going through this process. Where are those tails? Where are my rules met? And this is also teaching you a little bit of patience here. Because you're recognizing that these tails don't happen every 8 seconds, guys. Sometimes you have to sit on your hands for a second. Sometimes you have to be patient. But if you are, and you realize that all the money's not your money, come on, market, where's that circle? Man, they are flying today. This is amazing. There it is. Right back to resistance inside of the triggers. 1 time, 2 times, 3 divergences, 4 divergences may kill the trade. No, you're on playback? Right on. So we need to study the looks, guys. You got to learn them. They got to be easy. Look at that. Potential to break. Oh my goodness. Can't make this stuff up. Right back to resistance, right inside of those triggers. And sure enough, it just keeps going down. This one had the potential to break. That wasn't very long ago. And that was a pullback right to support right inside of the triggers. So I'm not making this up, guys. This is a live market right in front of you. Learn these looks. Trust these patterns. There it is again. And the easiest way to do that isn't necessarily taking trades, guys. As a brand new user, trades are a little overwhelming. They're fast. They're hard to catch in the moment because you're still learning. So my hope for you is that you learn those first two, momentum and path, strong triggers and a clear path. Commit them to memory, understand them, and you'll be able to recognize them in a fraction of a second, which means you can devote your entry or your efforts and your energy to the entry. So the easiest way to do this is to take pictures, guys. Go back this afternoon, take 25 pictures. I mean, in today's market, you could open up this large chart and take one picture. And you could say strength with potential, and you could say strong triggers, and termination, potential to break, weak triggers. And you could get 10 of your pictures from one and just annotate it. And then take those pictures and drop them into the basic rules. There's my strong triggers, there's my weak triggers, there's my clear path, there's my termination. And if you take the time to explain on the chart why the rules are met, you're creating this correlation between what your eyes see and what your brain feels about that look. And your brain should feel good about the advantages, and it should be hesitant to trade when the advantages are gone. So go back and study those. Take those pictures, put them in there. Give it a couple minutes every day before you get going. And as you're taking those pictures, this is the high probability trend trade checklist, which is just each of the rules with pictures of what it means to have them met and exactly where to put your entries and where the market shouldn't go. And all that's laid out for you just to help you study. And then there's a checklist to hold you accountable as you are taking these trades. So every time you're thinking, okay, it's time to go long or short, you should be asking yourself, where's the market coming from? Do I have momentum? Is my path clear? Do I have an area inside of triggers? Start writing these rules on your charts every time you take a trade. You'll learn to police yourself. And nobody's ever followed this checklist truthfully and done worse than 70%, guys. This is that kind of everything you need to be successful part that I promised. And it comes with the plan. And this is the KISS plan. And the KISS plan is a stepping stone in your learning journey. The KISS plan is the foundation. It's what teaches you to read your indicators. So this isn't your only trade. This isn't your get-rich trade, guys. This is your foundation building, let me learn to read my indicators trade. And this KISS plan is designed to optimize your chances of success. And I love that phrase, optimize your chances of success. This is the best of the best if you're a brand new user. I've had new users get funded in trading accounts in their first 30 days with Nexgen by learning these very basic rules and committing to following them. And then through simulation study, class feedback, continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, if you feel like you need more, it's your chart reading that's going to open the door for more. But there's two things you have to know before you sit down to trade and you're not on simulator. You have to know why you'll enter. And the short answer is because your rules are met. Because your rules are just describing a pattern that's been proven to win more than it loses. And if you verify and trust the pattern, there's no reason to not consistently enter when your rules are true. And guys, your rules will help remove emotion. If you have a loaded coin that lands on heads 8 out of 10 times, you're never going to bet tails. You know that you'll lose a couple, but you'll never bet tails because you know long term the pattern says head wins more than it loses. So you always bet heads. That's kind of what trading is, having an edge every time you enter. And then you have to understand when it's time to exit. Why will I exit my trade? Either at a profit target, and you'll use your chart reading to define intelligent profit targets, or because the advantages that got you into the trade have gone away. So, for instance, if I enter a trade at an area inside of favorable large triggers, and the market goes 4 to 5 ticks beyond those triggers, beyond that retracement zone, I'll choose to exit the trade rather than hope the market magically reverses from beyond my advantage point. If I'm in the trade and 3 divergences print, and I know that that may terminate a trend, that's an exit condition. That is my advantage being gone. And guys, losses, getting stopped out, having to exit a position is a normal part of trading. Focus on advantages. Define your entry. Because great entries create very manageable trades. Great entries reduce risk. They increase the profit potential. And then once you're in, you've got to manage. And management tends to be the more difficult of the two. If you keep it simple, everybody in this room will be able to identify the area where the market is most likely to continue. I would say in the first week, if you really focus. It doesn't mean you can do it instantly, but you can scroll back, get those tails circled, and understand the pattern in its most basic form. Management means that you have to be in a live market with something to lose, and you've got to be able to recognize these advantages going away if there's an exit condition. And until you can do that, the KISS plan and the management section of the KISS plan is going to help you. It's going to help you understand stop placement. It's going to help you stay focused on getting paid, because that is the goal of day trading. So it's based on 2 contracts in the KISS plan, and it's 100% dependent on your ability to enter the market where the market is most likely to continue. So if then is what the KISS plan management is. If then, if entry is 2 ticks below resistance inside of triggers, sounds good, Cav. 1:30 a.m. Woo. That's a long meeting, Cav. I assume. Guys, if I enter 2 ticks below resistance, then my stop is 4 to 5 ticks beyond the triggers. And this is where the market should not go. And you will know your risk before you ever enter the trade. So you'll look at your charts and you'll say, I have to enter at 71.34. That's what my rules say. And my stop has to be at 71.49. That's what my rules say. And that's $150 worth of risk. And some of you are going to pucker up and say, oh my gosh, that's too much money. I don't want to take this trade. I don't want that kind of risk on it. And that's okay. That's your right. But if you hover your stop right at the top of the triggers, the retracement zone, it's likely to get hit. If you put your stop at the areas most likely to create a bounce, it's likely to get hit. You get stopped out, then the market does everything it's supposed to do. If you're not willing to accept the risk, guys, choose not to take the trade. Don't try to beat the system, to outwit the patterns. You'll find yourself getting stopped out of trades. If you don't get stopped out, if they don't go up there and get that, it means that you get a reversal bar in the direction of your trade. And that reversal bar prints, and you're going to redefine where the market should not go. And you're going to say, okay, now the market's going down with momentum. Now the market's going down with a clear path. Now the market has bounced off the area inside of triggers. It shouldn't go a couple ticks above that one if this one's going to run to my first target. So your new stop is 2 ticks above the reversal bar, and that $150 worth of risk per contract has just diminished down to $30 worth of risk per contract, and that feels better. Without a doubt, it doesn't guarantee a winner, but if you lose, that's a tiny little loser. And if it doesn't hit your stop, it means that we made it to the first contract, the first target. And the first target's at $100. It's always at $100 in the KISS plan because the goal is to learn how to get paid, guys. And if price reaches your first target, one of your contracts is automatically removed and those funds go into your account. And this is that success that creates confidence. And this is that win that dries up sweaty palms and reduces your pulse. And with one contract remaining, you're going to move your stop to break even. And you'll notice that I didn't say move your stop to where the market should not go. At this point, we're just taking all the risk off the trade. And your second contract, guys, it's a confidence builder. The second contract is a trust builder. You're going to hold for that second contract or that second target with absolutely no risk on the trade. That makes it easier. And you've already been paid. And if they don't get you break even, it means they made it to your $200 target, which means that this is a $300 trade. And most of you in the room are like, well, Mark, $300 isn't enough for me to make a living off of. $300 doesn't pay my mortgage and feed my kids. And guys, this isn't a $300 day. This is 4 minutes of your life. 4 minutes of your life in an 8-hour trading day. And it's based 100% on advantages. And if that was the best you could do every day, you're a brand new user, that's still 75 grand a year in the account. And then add $100 to it. And that's a 6-figure income based on maybe being active 4 or 5 minutes out of the day. And guys, that's a pretty outstanding way to make a living. And what you'll find is that once $300 to $400 a day becomes easy, $600 to $700 becomes easy. And once $600 to $700 becomes effortless, it's not uncommon to see you guys making $1,000, $1,500, $2,000 a day. And you're not doing it with more trades, a bigger plan, more complications. You're just adding contracts on these great trades. Because a $300 trade with the exact same management plan but doubling the contracts becomes a $600 trade. Same time in the market. So that's kind of the goal, is consistent profits every day. That's what gets you to the long-term goal. But you've got to learn the process that yields results, guys. You've got to learn the looks. You've got to learn the patterns. So I'm going to drop this file in the room right now. This is the Everything You Need zip file. Inside of that zip file is the PowerPoint that I used to teach. It is the Chart Reading 101, helping you get to where you want to be. It is the High Probability Trend Trade Checklist, making sure that you know exactly what it looks like to have your rules met. There's the KISS plan, optimizing your chances of success with the high probability trend trade. And then the second page is taking you to that 50-50, that medium probability, that potential to break trade. And there's different rules because you've already lost one advantage. So you're demanding a strong top. You're demanding odds favorable momentum on both charts. You're insisting on no divergence. And then you're going to enter the way you do a trend trade. And guys, if you don't understand the strong top or bottom, you're going to make mistakes. If you can't identify momentum, you're going to make mistakes. If you don't know that it has the potential to break, if you think it's a clear path, you're going to make mistakes, guys. So learn the first one, make it easy. It opens the door for the second one. And then that's the first hour. That's the first hour every day. We learn the rules, what they look like, how to study them, where to study them, a plan to study them. You can simulate, you can practice, you can post in the room, you can tell me what you saw so that I can give you feedback. I saw odds favorable momentum and a clear path. And I say, Jen, I disagree. This only had the potential to break. It wasn't a clear path. And Jen's going to go, oh my gosh, you're right. Look at the trigger location. My bad, but that's okay. And then it pulls right back to resistance, right inside of triggers. And because it's a medium probability trade, Jen says, you know what? I might have to exit a little more aggressively. It's okay. Jen, it was the perfect example for the room. Everybody is going to make a mistake every now and then with a read. But it doesn't change the fact that Jen had momentum. And the only difference was it was potential. And since it was just potential, she could manage a little more assertively, a little more aggressively. And then when it starts to weaken, that's when the market goes up. Jen, it's a beautiful trade. It's a late entry. It's a late entry, but it's a beautiful trade. The correct entry, and let's talk about this real quick. The correct entry is up here at 25, which means that exit at 12 is $130 per contract instead of getting in at 18 and making 60. Great entries create manageable trades. And guys, that's what we're going to do in the second hour. Thank you for that example, Jen. We're going to go back and we're going to look at everything that's been posted in the room, and we're going to go back to those three core advantages. We're going to talk about the momentum, we're going to talk about the path, and we're going to talk about the entry. And every trade that you give me, you're going to tell me what you saw. And we'll do exactly what we just did on Jen's. Hey, it was actually 50-50, not a clear path. And having gotten in at the area would have increased profitability and reduced risk dramatically on that medium probability trade. And then she'll take that feedback, because Jen's an amazing student, and she'll drop it in here and she'll say something like, make sure the path is clear so I know how to manage. Or great entry would have reduced risk, increased profits. And then tomorrow morning she's going to look at it and she's going to go, well, Mark, it makes me a little nervous to enter at the area, and that's why I did this, but I'm beginning to see how these great entries increase profitability. I'm beginning to see how these great entries reduce risk. And eventually Jen gets to the point where she's like, all right, I'm going to start entering at the area. I'm going to stop waiting for confirmation bars when I don't need them. And it's going to help me increase profitability. Your screens aren't the same sizes? Okay. Yeah, that came out just fine. I can see your large chart, I can see your small chart, and I love the writing. So Mighty Max, I think you're in a good spot. We'll get this one. I get these in order. So as we come into the second hour, guys, don't play the trade police. Understand I'm not going to rip you to shreds if you make a mistake. We're just going to talk about your advantages, your entries, your exits, and we're just going to keep moving forward together a little bit every day. So I'm going to go take a break. I'm going to stretch my legs. When I come back, the rest of class is going to be dedicated to pictures, questions. Post them if you have them. Do not be shy. Squeaky wheel gets the grease, guys. I'll be back in about 4 or 5 minutes. And we are going to get things moving on this International Beaver Day. I'm going to scroll up to the very top of the classroom and we're going to start looking at some of the pictures that were posted. Pete got us going today. 1, 2, 3, 4, 5 of them. Because that's how Pete works. I love it, guys. Don't be afraid to overpost. In your brain, you think you're overposting. You're not. You are posting just enough. So here's his first trade in the cash account. He waited until price cleared the fib. He got price away from the decision-making point. And then once it did, he just jumps in. He goes, wow, I got momentum on both charts. Nothing in the way. I'm going to ride that momentum. And you're out at 68. It was moving so fast it looks a little different. But guys, that's 88 and 68. That's a quick $800 in 30 seconds. Pete, great job. And guys, it was momentum and path that led the way. So as you start looking at other people's charts and you're like, oh my gosh, that's not a trend trade, Pete. What are you doing? Understand that Pete looked at his large chart, said with odds favorable momentum and absolutely nothing in the way, with these core basic advantages in play, I'm going to find a way to make some money. And man, you did a great job on that one, Pete. $800 in 30 seconds. That's a good 30 seconds. And then Pete says, whoa, wait a minute. Everything says down and my path is clear, but my small chart gave me 3 divergences in the same price range. And I know because I paid attention in class that 3 divergences in the same price range on a small chart is a termination condition. I choose not to trade. And he says sitting on my hands. And guys, this is a great picture. When you take pictures of why you won't enter the trade, when you take a picture that says, hey, my rules aren't met, I'm choosing to do nothing instead of hoping I can predict what the market will do, you're really reinforcing that the rules are your lifeline, that the rules are everything to you. Weak bottom, not a termination that reversed the market. Market reverse, triggers rolled up and separated. Odds favorable momentum, and it is. It's a 50-50 because it hadn't made it through the fib yet. 1 divergence on a 50-50 makes for a tough day, ladies and gentlemen. 2 divergences on a 50-50 makes for an even tougher day. And then 3 divergences says, Pete, let's get out, break even, $200, and let's wait for the change to happen. And guys, the rule number 1 for the 50-50 trade is strong bottom. Because when you have a weak bottom, that mid-band is more likely to hold. When you have a weak bottom, the 50-50 is more likely to fail. Couple that with some divergences. Pete, great heads up management. And guys, this is why we speak in terms of advantages. And I want you to see this. Pete said, because my path is not clear, I will manage assertively. That's it. I have momentum, but my path isn't clear. Oh my gosh, it's not high probability. I'll manage assertively. I'll take quick profits. I'll get to break even ASAP. Pete, great management. And that's exactly what happened. Weak bottom, mid-band held, got momentum, and now it's a 50-50 the other direction. And Pete says, look at this, 3 divergences, 4 divergences, odds favorable momentum. Let me ride that wave of momentum and get paid. Nice job again, Pete. Busy morning. Weak bottom, strong triggers, 50-50. Potential entry. Didn't take this one because of the weak bottom, divergence in mid-band and the large triggers, but it worked out. Can't catch them all, have to play by the rules, right? And then guys, this is what's kind of funny, is that's the exact same look the other way. 2 divergences didn't scare you, Pete. 1 divergence kept you out of this one. Your brain will do that to you. Your brain will do that to you. Sometimes you recalibrate and you say, whoa, wait a minute. The one with multiple divergences was on sim. Pete's like, oh, don't say yes because here it comes. So what are you doing when you take a trade on simulator that doesn't fit the rules? You're telling your brain it's okay, especially if you end up winning. What you're doing, guys, when you practice, I know this is for everybody, Pete. When you get lucky on simulator, your brain doesn't know that it's luck. When you break your rules on simulator and get paid, your brain latches on to whatever it is you just did. So I always encourage you guys, practice like you want to play. Do your best to adhere to rules when you are on simulator, and you're more likely to follow rules in the live market. Here's Cav. Cav says, check it out. I've got odds favorable momentum and a clear path, that core. There's your pullback right to resistance, right inside of triggers, and it was easy money on that one. Great trade, Cav. And I know he's not in the room, but Cav doesn't need feedback on these. He knows exactly what he's doing. Look at this one. 1, 2, 3, 4 divergences in the same price range. And Cav says, man, with 4 divergences, terminations everywhere, triggers rolling, I'll find a way to capitalize down to trouble. And that's exactly what he did. Great job again, Cav. And then once it comes through, has the potential to break, takes a quick little trend trade, and is out of trouble because it's not perfect over here. And guys, this is one of those times where you might say, this isn't a clear path, but because of the strong top, because of the momentum, because of no divergence and strong triggers, I'll take a quick little snippet as it retests that area. And Cav, you did it great. And then the Wayne show, 2, 3, 4, 5. I always think it's funny that the most consistent profitable traders in the room are the ones that seem to post the most. The people that have the fewest challenges are still posting in the room for feedback, while other people that maybe are struggling are sitting in the backgrounds, not eager to share, to get feedback. It's always interesting to me. All right, so let's see. Odds favorable momentum, clear path. Weak top 25 bars ago, means nothing. You take the trend trade and it just doesn't work. That's a good loss. I love that. That's a good loss. Odds favorable, clear path, good loss. Why? Because the advantages were there. I did the same thing this morning. Different market, perfect trade, odds favorable, clear path. I got smoked. I'll take that loss 1,000 times, guys, because it fits the plan. Odds favorable, clear path. Let's find a way. Oh, all right, Andy. Have a good one, man. We'll see you tomorrow. Odds favorable, clear path, find a way. He finds a way down. It hits a bounce point. And when it pulls back to resistance inside of triggers, oh no, he went the other way. Got in a little early for Chili Dog. Room to get out before the outer band. And then when he hits the outer band and support, and none of the triggers break, and there's one-to-ones, Wayne says, I'm just going to trade it back to the mid-band and see if it turns into a trend trade. Really nice. Counter trend. Fights everything. Done perfectly. Weak bottom. Using a range chart. And you just find a way to capitalize. And Wayne, this is a little interesting because these HVA trades, as Nexgen teaches them, require a termination condition prior. Wayne says, yeah, but Mark, look, I got divergence and I've got strong triggers and I've got everything that I need to take this trade, and I'm throwing one extra piece of confirmation in there. One little extra piece. And Wayne knows that divergence from the middle of nowhere isn't a termination condition, but very often they make it up to the mid-band with this look and weak triggers, and he capitalizes. Your chart reading will open doors, guys. Your chart reading will take you next level. It just takes a while. And then once again, odds favorable, clear path, and gold doing what gold does. Gold doing what gold does. Would take it every time. Odds favorable, clear path. Pull back to the area inside of triggers. It didn't quite get his entry, and he panicked. Panic entry, Wayne, I see you. Oh crap, it's going down without me. And then it came right back up. Wasn't panic. Most people it is. You're telling me you have a rule that says if it just misses your entry by a tick and starts down, you jump in? Oh, that fib. Okay. I got you. So on the way down, oh, that's just, oh, see it now. I didn't even see the fib on the trigger, Wayne. That's my bad. I know, right? Gold. Gold is temperamental. Yeah, I was with you. Gold is temperamental. They'll test you a little bit. Great trading, though, Wayne. Just smooth. And then Pete, 4 divergences. Everything says down. You try the momentum, and it doesn't work, so no harm done. And then it turns into the trend trade, and you carry it to the fib. Absolutely beautiful. I love the management, Pete. You get in, momentum is lost, break even, whatever. Let the momentum trade fail, turn into a trend trade. Market never goes where it shouldn't, and down it goes. Nicely done. You guys are putting on a clinic for the new kids today. Everything says up from a strong bottom, and that's the momentum trade. Little snap through, bounce back. Easy to make money with all that momentum. And I like this. Pete says, all I'm using is momentum. Let me get paid on half of it. Let me take all the risk off the trade, and I'll hold that momentum trade until it either hits something solid or I lose momentum. Great job. Great job. Cav, Wayne, Pete. It is the Cav, Wayne, and Pete show this morning. Pete, there we go again. Termination. Everything's down. Strong triggers. Perfect pullback right to the mid-band inside of triggers. And momentum carries you to the fib. You just can't make this stuff up, guys. Bob be the man. Bob's like, you know, I'm tired of watching these old guys do it. I'm going to come in. Weak top. It was close, but 3 triggers broke the fib. That's it. Your smalls made it through. It's not a strong top, right? But it is odds favorable. It's not a termination. It's a perfect entry. What a great exit. And then you're like, man, better management would have had targets above trouble where all that momentum is likely to push it. But, Bob, do you feel bad about $350 in 2 minutes of your life? Of course not. Did you go live today? Not yet. It should feel great. What a great trade. And there's always more coming. And this is one of the things, Bob, that you're realizing and that new users don't get yet, is that there's always more coming. There's always another trade coming. And if you get out, there's going to be another opportunity. And you guys have to believe that. When you believe that, it's easier to exit at a fib or exit at trouble because you don't say, oh no, that's the only $350 I'm going to make today. Something's going to happen where you can come through. I love this. Odds favorable, and look at that. It pulls right back to support inside. You had a limit 2 ticks above the mid-band. All right, can I yell at you, Bob? Reversal bar prints. We're just going to go through the same language for the entry rules and the whys. Market is most likely to retrace somewhere inside of the triggers. Rule number 3 says don't trip over a couple pennies and miss out on all the dollars. Rule number 3 says activate a limit order 2 ticks above highest area inside of the triggers. And let's talk about the whys. because the large chart is screaming north. We don't expect the small crowd to push too terribly deep. Horrible spelling. So, and I see this a lot, and Bob's thinking, man, I'll show that market. I'll get in at the very bottom tick like a bad mother scratcher. And it just didn't make it to the bottom of the retracement zone. It hit 1, 2 areas. It didn't make it to the bottom of the window. And man, that's it. And it's always a tick or two above the highest point's support, because this chart says we're more likely to go up. One thing people will do, Bob, like, I don't want to put it all on here. I've seen people, you're trading a 4 lot now, right? I've seen people to put 2 at the highest point and 2 at the lowest point. And they say, I'm going to make sure I don't miss the trade. And if they make it to the bottom, I'll just add 2 more. See that a lot. And if they don't get you here, well, then you can add those other 2 on the way up. Something to think about, but rules get you in a couple ticks above that highest point, that highest point of support, and it's a very deliberate reason. Good stuff, Bob. Oh, that's the same one. I think you double posted, or maybe I clicked on the same one twice. I think I clicked on the same one twice. Oh, 3rd time. We saw yours. Never mind. I'm going to stop clicking on your links, Bob. We're going to go to Pete. All right. Got through all the problems, but anything can happen triggers. And then your small chart shows you the change that you can't see happening. And that's awesome. Great patience on that one. Great patience on that one, Pete. All right, so we're going to take a second. I'm going to share something because we've seen a couple different pictures today. I'm going to put this in the room for you guys. I firmly believe, and my beliefs don't have to have any bearing on what you're doing, but I firmly believe that there's 4 pictures that you guys should be taking as you're learning the software, as you're getting in and out of the market, as you're doing your chart reads. And the first one is always take your pre-trade when you set that limit order. And you don't have to annotate it, but you'll go back and look at this, and you'll just say to yourself, okay, without the adrenaline, the heat of battle, did I follow my rules? Was there something that I missed? And this one, I'll usually take it, and maybe I'll look at where it was, and maybe it needed to be adjusted or whatever. I just take it. And then during the trade, every time I move a stop, every time I take profits, every time I think I see a change, I take a picture. And that's this second one is great for management. Come back and work on your management plan. After the trade is done, I take a picture and I write my rules on the chart. And I show the trade from start to finish. And I talk about the advantages and the disadvantages and my entries and my exits and my reasons why. Because this is the picture that comes to the room to get the feedback. This is the one that's building my trading plan. And then the no trade. And Pete's done such a good job of this one today. I wanted to share this little document with you. When the rules aren't met and why the rules aren't met. And guys, this is the reinforcement that you're here to follow rules. That following rules creates an advantage. And that they've been proven to win more than they lose. And your best shot at trading longevity comes from following the plan. In pictures 3 and 4, these are the ones that you should be dropping in the room. Picture 3, you'll get all the feedback on what you did. In picture 4, the no trade, you'll get the feedback on why you didn't. And here's what happens with that one, though. Chart reading. Let me go to my entries picture real quick. Very often, you guys will put this picture in the room, and you'll say, and let me draw my arrow, you'll say no trade termination condition because of those one-to-ones. And if you do that, then we go back to the lesson on which chart defines the areas that are problematic, which chart defines a termination condition. So what you did is you missed one, but then you get the ability to not miss it next time. Or maybe you say no trade, the colors didn't match on the triggers. And I remind you that this is where momentum is defined. Very often, I'll see you guys with the entry up here saying, you know, well, I jumped in because it was going without me. And I'll say, remember, your great entries come from down here. So your no trade pictures, guys, those are going to open doors for you to catch more trades if you weren't talking yourself out of advantages. And I can tell you that I've done it. And I was the guy that would never take the trade into these one-to-ones on a small chart. And finally, I started posting them in the room that my brother taught. And he goes, Mark, all these one-to-ones did was give you the bounce back to your perfect entry. You can manage when you get to them if you want to, but don't fear it. The large chart defines. So make sure that you're taking all the pictures. I dropped that in the room, but I just wanted to do that because Pete's done such a good job today of saying, I'm cool not trading, my advantages are gone. And when you get to that point, when you get to that level of confidence, it gets easier. All right, Trina. Strong top, no triggers through. I love it. Odds favorable momentum, triggers wide, dig it. Pull back to the mid band, and you're making money. And the only thing that I'm going to say is that, I guess the large chart rolled. You didn't see it over here, but it's perfect. You take the pullback, you take it right at the mid band. You missed it by a tick. It was moving fast. Stop where the market shouldn't go. And an easy $300. What a great trade, Trina. Yeah, or if it's moving too fast, it's okay to sit on your hands. All right, strong bottom, very nice. Odds favorable, absolutely. 50-50, without a doubt. One divergence, not so good, right? Can hurt it. But you get in on the pullback, runs you over a little bit, and you make money before the trade fails, which is outstanding. Your great entry allows you to get paid before the second divergence, before the trade fails. Another great one, Trina. They grow up so fast. All right, strong top, odds favorable, potential to break. Divergence says it shouldn't have, but you chose to, and you get in at the right spot, and your stop's where the market shouldn't go, and you get paid, and they get you break even. Entry stopped out before you moved your stop. Oh, they didn't get you. So you were in at 15.75. You didn't get paid at 13.75, Trina? At the $100? Now, how did it get you at 16.25? I'm just curious. If you're in at 15.75, how did you have an 8-tick stop? Because it's not behind the reversal bar. And if it started at 12, it should have been up around 18 and change, right? And then it bounced. And that's where they got you. I don't know. It's a weird look. It's hard. I guess it depends on what your ATM strategy is set at. Because if they ran you over, okay. But you never got the 10, right? If you were in at 15.75, 10 ticks gets you is 18 and a quarter. Right up here. How did they get you? How did they get you at 2 ticks? Unless the market was just cranking so fast, it went up, down, and it couldn't register, which is possible in a super volatile market. It is possible in a super volatile market. First momentum trade. Odds favorable, clear path. Waited for it to break, jumped in, got paid. This is beautiful, Trina. Welcome to the Chili Dog. Wayne, good job with her on that one. You're awesome. Great job, Trina. And you've taken your chart reads and you've added. That's all you? Great job. All right, Miss Jen. Weak triggers, middle and nowhere. 50-50, 1, 2, 3, 4 different areas, divergence prints. And Jen, you say do nothing. You say, you know what? I don't see an advantage here. I don't see an edge. I see too many things going wrong. I choose not to trade, and it keeps you out of it. Nicely done, Miss Jen. Little girl power work in here today. Strong top. You do have momentum. It is a 50-50. All right, so let's look at the difference on this one, Trina. No divergence here, pulls right back to the mid-band inside of triggers. This was your entry. And then as it comes back down, it's a little late on that 50-50. This is your entry that gives you the best chance. And you guys will see this. And I want you to think about this. If I'm trading a 50-50, my hope, wish, and want is that momentum crushes the area I'm hoping breaks. If it starts to dance at that area, every fluctuation on that small chart starts to reduce the likelihood of it breaking. Because what you're seeing, and this is just one of those cool things. The first one with no divergence does everything that you hope it should do, right? And you're hoping that it crushes that area here. And instead of doing that, it starts to dance again. And you see that the buyers are fighting. And it gives you one more chance. And then it happens again. And then it fails. So one of the things, if I'm looking for a medium probability trade, if I'm looking for this 50-50, and your large triggers were almost a full bar away, which takes it away even more, I want the first shot. And you guys can do whatever you want. This is just me personally. If I miss my best entry on a 50-50, I'll typically just ignore it after that. Because that's the one, if it's just going to break because of momentum, that's the one that should do it. You should never get a second shot at a 50-50, my opinion. Does that make sense, Trina, and all you 50-50 traders? See if we can find like a real world example. You maybe take the 50-50, right? And they give it a shot. And once it starts to dance, they're not breaking that area. And you get the big untradeable. So kind of cool how that works. And that's one of those things. As you sit with the software a little longer, you'll begin to notice patterns like that. And you'll say those things to you, to yourself. And then Jen, 50-50. We talked about this one. Just a little late. You make a little money on it, right? And then it weakens up for you there. Great entries, create manageable trades. There's the first 50-50. There's the second 50-50. There's the third 50-50, and then it fails. Yeah, we saw that one. They do, right, Bob? And I think that when you think about, you know, here, watch this. Let's go back to the core advantages. If I don't have a clear path, I'm hoping momentum breaks it. That's the long and short of it. Momentum should smash. And if it doesn't, there's that dance, right? And it becomes more difficult. So, knowing what you're up against. All right, Mighty Max, you ready? Although I entered late, I read the market mostly on the 13-2 chart and noticing it is on a downward trend. Absolutely it is. It's on a downward trend. We know that because the background is red. So let's look at the basic advantages as we're coming through here. You actually just jumped into the market. You never get an entry here. Your charts look weird. Mighty Max, are you with me here? So your chart looks weird because where you entered, see where your synthetic triggers are? Pushing down really, really hard. I guess this was just, oh gosh, look at the timestamp. That's why. So you just jumped in. So let's look at it. Everything says down. Momentum. You hadn't reached the blue fib yet. So you really have momentum and a clear path here, Mighty Max. You just jump in. Totally cool. So if you're gonna just jump in, it's okay to get paid at a fib. Does that make sense? This blue line could stop the market. And from 98.50 to 96.50, that's still a $100 trade. That's a quick momentum blast. That's a chili dog trade. That's nice. And then what you run into is now it's starting to break through, but you're losing momentum. And it's pulling back to a potential trend trade. But see the fluctuations right at the key area? One of the great things that you can do is if you just jump in, and I'll never tell you not to just jump in. I love these trades. Momentum fails. And the small chart fluctuates. These are great $100, $110 trades. Get out, wait for the next one. And then maybe it turns into a trend trade. And then Mighty Max, one of the things that I notice on here is you're not trading with stops and targets, which is dangerous. The CME will tell you always trade with stops and targets. So what happens if this market just rockets up off support? How are you going to exit? Or what if it goes to the next key area? Where are you going to get out? No worries, Lonnie. Do you want me to get it real quick before you go? So I love the trade, Mighty Max. I think there was an opportunity to get paid at the fib. And just wait for the next trade, right? Put that 112 in, wait for the next trade. But stops and targets, so important. And if you need help with that, let me know. And where is, so from the trading page, I'm going to go to the software guide real quick. And then I'm just going to give you this one, ATM strategies. And that's how you put in your stops and targets. And Nexgen has a whole bunch of them in there for you already. They change this thing every time I look at it. But if you need any help with it, let me know. We can go through it in the room here, no problem at all. Look at that. Weak triggers, 3 divergences, big untradeable bounce. We've talked about that once or twice. Oh my gosh, same thing. Weak triggers, multiple divergences, big untradeable bounce. Guys, that's 2 different markets, the exact same pattern. That's kind of cool. Mighty Max, I dig the trade though. Your entrance was somewhat delayed because I assume the background color plays a role with the fib lines. Why would you assume that? It's okay. You're doing great. So we're going to go through. So the background is green, right? Mighty Max, this is a super slow, broad stroke of a brush. And all it says is, hey, guess what? Let's look for trades going in the direction of the trend, up or down. Does that make sense? So once we establish the trend, it becomes a flow chart. So if background green, look for rules met to go long, up, buy, however you want to say it. So the first thing I look for is, do I have strong triggers? And the answer is they look good. My larger up, my smaller above them, there's space between. That is 100% strong triggers. Does that make sense? Have you gotten that lesson out of it yet? Yes, but yes. Okay. My second thing is, do I have a clear path? So the recipe for a clear path is, I always ask myself, did price reach an area? And here it did, very much. And where are my triggers? Well, they're below those areas of resistance. So what you have here is a termination condition, which means no clear path. Does that make sense? That's your large chart read. You do have momentum, but you don't have a clear path. And the background color has zero role with the fibs. No role with the fibs at all. The background color only defines trend. Triggers will define momentum. Areas, fibs, will define whether or not you have a clear path. Which means that when you jump in at 125, and this is the exact same thing as going the other way, Mighty Max. An exit at 0325, another $100 trade, makes total sense. Relying on the momentum to get to trouble. Does that make sense? So on these jump-in trades, your large chart is awesome. Finding a way to capture on the way to trouble and being willing to get paid at trouble, because the next trade's coming. It always is. Great stuff. So what you've picked up on, Max, is momentum is your strong suit. And you're entering with a clear path. You really are, because price hasn't reached those areas yet. So now you've just got to say, how do I manage a momentum trade? Well, two reasons to exit. There is one, you hit an area, because areas can kill momentum. Or two, you lose momentum. So now we're working on the management. You've got the large chart look. You've got the momentum. You've got that not reached the areas yet. And now you just got to find yourself willing to get paid and wait for the next one to give yourself the highest chance of success, to be consistent over and over. Does that make sense? Good stuff, man. I'm glad to see you posting in here. Lonnie, strong top, odds favorable, 50-50, one divergence, perfect entry, quick profits, out at trouble. Lonnie, I'm not sure you need feedback. This is so good. Tracy, I don't know. How much money do you want to make? Great trade, Lonnie. How much money do you need to make to justify the risk you're taking on the trade? That's what you have to answer. If you're risking 10 ticks on a trade, do you want 4 ticks to trouble? Right? So you have to ask yourself, what's my target? If on the chili dog trades, as Ron taught them, created them, they typically have 7 ticks of risk, and the target is right at $110, $100 plus commissions. So I would say you need at least 10 ticks, maybe 12, before you get to trouble. So what happened is, and he's still learning here. He doesn't have exactly, he only had 8 ticks to get to the fib, right? But he did have momentum and path. So if you're cool with 8 ticks, perfect. Rock it out. Take your 8 ticks. Get out at the fib. If you say, I need at least $100 something, then this wouldn't have been your entry. Or you let it clear, right? So one of the easiest ways, Tracy, I love this question. Thank you. So check this out. And let's just use this right here. So imagine a world. You were judging his trade, right on. Imagine a world where you get in with momentum and then you get out at trouble. And when you start to clear the next area, you trade to the next area. When you clear the next area, you trade the next area. And you create this trading plan where your sole purpose is to avoid decision-making spots. And that's kind of what that chili dog trade is, that jump-in trade is, Tracy, is it's saying, I've got awesome momentum and I haven't reached something that could potentially create a bounce. Let me find a way to capitalize quickly in that momentum burst. And you'll create your own idea. Some people take super small profits. Some people take bigger profits. Some people hold the trade until they get a close on the wrong side of the small triggers. And it may be $100 and it may be $500. Man, the S&P is flying, aren't they? But avoid that temptation to be the trade police. Everybody's going to have something that works for them. Everybody's going to have something that makes sense to them. And then you just figure it out from there. So strong bottom, I disagree. So the recipe for a strong bottom, Tracy, is a termination condition that reverses the market. Does that make sense? That's how we define it every day. What's a strong top or bottom? It is always first a termination condition. And then if that termination condition reverses the market, we'll call it a strong top or a strong bottom. And there's this big misunderstanding with divergences. And I think that's what happened here. And why is your stuff fuzzy? That's okay. So divergence, the head and shoulders on the 5-1 doesn't count. You had 3 divergences on the 5-1, Tracy? It doesn't. So strong tops and bottoms are a large chart phenomenon because you're getting that overall, that big picture, what the people in charge want to have happen. 3 divergences on a smaller chart can terminate a trend, but it could just create a little bounce. So we're looking for terminations and strong tops and strong bottoms on the large chart. So great job if you had 3, putting them in there, and you may make that count for you. Large chart doesn't have it. And the challenge here is you do have momentum, but you don't have, well, maybe you do. The small trigger just barely gets through. You've had 2 divergences already, and you take the entry, and then it hits your first target and then did another divergence print to take you out of it. So that's great. First target hit and then stopped out break even. One of the things on these 50-50 looks is when I teach the look, there's a word that I use, and it's, well, that's smash up. And it's smash, letting those small triggers get 2 to 3 points above. When they just kind of prairie dog like this, and you can see that it happens a lot, it's not a great indication. The fib did stop printing though, which is nice. So you're 50-50 on this one down here, and not so much on this one. And that's a huge gap. I think it's great. Beautiful entry, quick profits, manage assertively. That's what you do on a medium probability trade. Nicely done, Tracy. And then we have another one for you. Odds favorable, 50-50 again. Entry first resistance and the triggers, absolutely perfect. And then you get stopped out. And it just happens sometimes. It had the potential to break and it didn't. That divergence makes it a little harder to break because it's a loss of momentum. But that's a good look. Off the fibs, all the momentum, potential to break, perfect entry, small risk. I would lose that one with you, Tracy, 100 times. That's what we call acceptable losses. When you've got more advantages. Does that make sense? Yeah, I mean, nobody likes to lose, but it's part of it sometimes. If you're going to lose them when they look like that. Weak top, odds favorable. 2 divergences. You broke your rule. You took it anyway with the potential to break. And managed out on the 3rd divergence. Nicely done. With all that momentum, you're able to find a way. Good job, Bob. Pete. All right. This took all of 35 seconds. Weak top. All the momentum. Same entry as Bob. Money, money. Nicely done, guys. I feel like you two are in cahoots, taking the exact same entries, the exact same trades. Nicely done. All right, Cav made his way back. And guys, remember, if you ever can't be in the room for whatever reason, just go, hey, Mark, I'll be back in a little bit. And when you come back, we'll click. And I think that's all you had, Cav. How we doing today? This market's fast, guys. It's a fast market. Your charts are being weird. There's my large chart. There's my small chart. Let me get these for you. What's it doing? You want to show me a picture, see if I can help? Okay. Whoops. All right, Cav, let's take a look at yours. Love this. Odds favorable, clear path. Pull back to resistance inside of triggers, easy money. Jerry, you have family in town. But they leave this weekend. Families like fish, right? 3 days, they start to stink. But that's okay. The markets will be here. We'll be here. This is a pretty good week, I think, to have family in town. Markets have been very aggressive, very fast. Perfect trend trade, Cav. We had family in over the weekend. It's always nice to see family. No more longs, and so you guys will get to a point where you're like, there's no way I can go long. Terminations, multiple divergences. And Cav says, I'm going to find a way to go short. And maybe a little premature. You didn't even let the large triggers roll, Cav. Maybe a little early on this one. Getting below the moving averages is great, but nothing has said down yet. Everything still says up. And there's clearly a lot of fight up. Yeah, it's screaming, Jerry. And then after the quick profits, it turns into a termination condition. But no divergent strong triggers. You just use that momentum to capitalize quickly, Cav. Nicely done. I think this is the one that gets a lot of people. Your brain starts saying, go short, go short, go short, go short, go short. And just letting those large roll, really get those smalls below, really makes a difference. Because you're trading against odds favorable momentum up. And with odds favorable momentum up. And that creates a little bit of a challenge. I hope that makes sense. Crude is totally different on each. 525, 525. So Jen, when's the last time you did a big clean out? 6140, 6140. Oh, 1 week ago. Goodness. It's two different datas though, right? So two different computers. One is your live data. One is your funded data, right? Two different data providers. Both crude, yes, but different data providers. Cool. So that, because if you look at your two charts together, here, hold on. Let's do this real quick. Dun, 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 dun. You guys know I'm not a tech guy, and way to not scale them the same way. That just would have made it too easy. So coming off resistance, 50-50 over here, right? It looks pretty much the same from a bar standpoint. You've got this fib, that fib. You've got this fib, same little step, that fib. You've got the exact same look here. This is just scrunched a little bit. The exact same look here. The exact same, oh, no, mid-band. Okay, so our moving averages are a little different. Here the mid-band's below. Cool. So, but notice how you don't have divergence here, but you do have it here. That can be a data deal. That can be, so John Novak and I in the morning, sometimes we'll run the exact same charts, but with a different data provider. Like maybe I'll be Trade Evade and he'll be Kinetic. And it'll be these little subtle differences because maybe it's a one tick difference and that butterfly effects over time. I would, and this is what I would do. If it were me, I would do the database reset and repair, clean out your cache and tick, and then just bring it back up and see if that cleans it out. And a lot of times that'll fix it up for you. No, you didn't slow the class. You made everybody just a little bit smarter. Thank you for that. That's the stuff, guys. That's the stuff. It's not always patterns. Sometimes it's, hey, Mark, how do I do this with NinjaTrader? Why doesn't my chart look right? What's going on, right? Wayne, I see targets. Oh, there's your entry. Woo, look at that hold. I like it. Wayne gets in with odds favorable momentum and a clear path. Just jumps in. Maybe it was a trend trade on the small chart, I can't tell. Everything goes down. Hits areas, triggers weekend. And this is where you make the decision. Do I get paid at a fib or not? And Wayne took the approach. This fib is where I was going to get paid in the first place. That's where I'll put my stop. And if they decide to just drop, I got nothing to lose. I like this management plan. I like how you do that. This is where I would get out anyway, and if it drops, cool. And that was all in the same second. Yeah. Guys, the market's fast today. Morgan. Strong top, odds favorable, 50-50, divergence prints, perfect entry. Didn't work. First loss of the day, still up though. I love it. Just didn't work. You already had two divergences though on a 50-50, didn't you? I mean, one on the small chart and then it's a pivot stop out. and the triggers are weakening, and it takes momentum to break things. And you've got two signs of it dying here. I love a strong top, but I'm looking at that trigger location. Odds favorable. Everything says up. You take the jump in, chili dog, and it just doesn't work. Happens sometimes. You got to be willing to take a loser, right? Great job, Wayne. I would take that loser all day long. Momentum, absolutely nothing in the way. Right back to the mid-band. Catches it on the way up. Mid-band's on the wrong side of the triggers. Out at trouble. Break even on the second. Nice trade. You guys are killing it. Yeah, Morgan, 50-50s are weird. They really are. Like, strong triggers on a 50-50 really helps. And that was a term, but... And that was yours right there. And, man, that was a good trade. It was such a good trade. It was just starting to weaken a little bit. And the market is indecisive. And you can see crude forming a range there. And I just don't even want to think about trading the S&P. That's wild. That market is screaming. Look at that thing. Egads and little fishes. All right, guys, I'm going to take 5 minutes. When I come back, we're through all the pictures. If I missed a picture, let me know. Man, crazy. I don't know about you guys. That's too fast for me to manage. I'll be back in about 5 minutes. It is, Cav. If you have a question, post it. If you have a comment, post it. If you have a picture, post it. If there's something you want to talk about, let me know. Last hour is for you guys. I'll be back in a few. Here we go. Last hour. That's nuts. That's the last minute. Pretty crazy. What would you guys like to talk about? I'm going to put the ball in your court. Is there a concept you need help with? Look at that nonsense. What a fight, huh? How we doing in here? Do we have any newer folks in here? Wondering what the hell we're talking about. Let me back up and I want to show you guys something. So this is a document that I created trying to consolidate everything that I teach in this room in the least amount of moving parts. And this talks about what we do every day, guys. And we learn 3 rules on 2 charts. That's the goal. 3 rules on 2 charts. We talk about momentum. We talk about having a clear path. And I remind you guys that those are your core. And then we find a way to enter once those are present. So this document goes through talking about momentum and clear path and encouraging you to commit to learning that. It takes the rules, where to find them, the indicators that you need to use. It talks about momentum individually and how to recognize it. And it talks about having a clear path and how to determine whether or not you have a termination condition and how to identify a termination condition and what it looks like when it breaks and what it looks like when it reverses. And then the entry advantage, guys. Exactly how to get into the market when your rules are met and even how to study it. And that little trend trade simple, guys, that's everything that you need to be successful with the software. Learn it, commit to it, and you'll be amazed at what you can pull off. Man, I don't know. I feel like it's just fast. All right, I'm gonna start flapping my gums a lot. Like this one. I labeled this "Know Your Place." You're not the shark. It's our metaphor for big crowd and little crowd, and then you guys. The sharks are the deep pocket investors. The sharks will make the market go the direction they want. They'll create the momentum that we rely on. They'll rely at the areas that we can see long in advance. Go into trading with the mindset that you're a remora, not a bottom feeder. You're an opportunist. And instead of you having to get the work done, you let this guy do all the work. Or girl, I can't tell. I think it's a girl because of those. But let them do it. And then you just grab a little snippet of everything that they do. And as long as you're following, it's amazing how easy it is to never struggle. But the second you try to get in front of the shark, you become lunch. Termination, weak triggers, termination, weak trigger, termination, termination, termination. If only there were a way to define the range they need to break out of. Everything says down, back of the bar almost clears, odds favorable. So, Wayne, the rules on the chili dog said let the back of the bar clear the 1-to-1s. How come? Because that bounce can happen. You're just a little early. Hey, what's going on? KJS trade? That's a great test. Are you comfortable writing on the chart? If you need a little example, let me know. I'll be happy to do it with you. Great to have you posted. Wayne, does that make sense? Awesome. Well, it's great to have you. If there's anything I can do to help, just let me know. Remember, keep it simple. Life is so much easier when you keep it simple. There's plenty of times to complicate. Who else is new in here? Talk to me, guys. You're new. First class. Rashid, it's great to have you. Um, Guys, I'm going to remind you, and I'm going to go back to it. Everything that I do in this room, guys, everything I do in this room. So let's do story time. I love story time. I started with the software 5.5 years ago. Actually, it was probably 5 years ago. I just had my second spine fusion. I had to end my career, and my brother said, "Hey, Mark, why don't you just learn to trade and not go back to work?" And I was like, "All right, let's do that." And he taught this classroom, the one that you guys are in. And if you've ever spoke with my brother, John Novak is one of the most brilliant people I've ever met in my life. He created the software. I had no idea he was this smart when we were kids. But when he would teach the room, Rashid, he would say things like, well, it's obvious. It's obvious that the momentum is strong. And it's obvious that this is where your entry is. And it's obvious that you should have exited here. And the reality is nothing is obvious to the new user. And I teach this classroom with the idea that your first couple days feel just like this. You're taking all of this information, and it's overwhelming. It was for me. And I'm exceptional. Trust me when I tell you. Just kidding. So what I do is when I teach this room is I try to teach it as though nothing is obvious. So instead of saying, hey, Rashid, let's learn how to trade, I'm going to say, guess what? Let's learn how to identify momentum and nothing but momentum, because that's the first advantage when we look for a trade. And then once you're good at this, let's figure out this clear path thing. And we'll break it down, and I'll give you everything you need to study, and I'll answer any and every question that you have. And once you have these two, you have what you need to be successful. And then we'll just define an entry area. So this classroom isn't designed to teach you to trade. This classroom is designed to teach you to read your indicators so that you know when it's time to trade. You have the ability to post in the room 15 hours every week to show me exactly what you did, tell me why you did it, show me where you did it, and I'll give you feedback. It's like getting a private session. For example, Wayne posted in the room, and Wayne said, check it out. It's clear, absolutely. And I know that Wayne loves to prove a point. And I learn off of Wayne every day. And I will say, yeah, but Wayne, this wasn't. And the rules for that particular trade that you told me that you took say that you've got to get the backup price past this problem area as well, because it could create a bounce the same way it did. And the beauty of this classroom is I don't have any pressure of wins or losses. I'm looking at a trade that's already happened, and I'm just breaking it down to a chart read. Does that make sense, Wayne? And you get almost the exact same entry without the headache. I don't know, man. I think we're about 50-50 on being right. We work well together. It's a lot of fun to do it. It is. So I point out, hey, I've got this that I see that maybe you didn't see, and maybe it just makes life a little easier for you. And it's still a great trade. You just don't have to fight the bounce. So great stuff. So Rashid, that's what we're going to do every day, is we're going to break it down a little bit every day, get a little bit closer every day, get a little bit smarter every day, get a little bit of feedback every day until the things you're doing become second nature. Ms. Trina, strong bottom, no triggers through. I love it. Oh, do you really have odds favorable momentum though, Trina? And this is a great way to get one of those lessons in, because what I'll do is I'll take your chart read. Trina showed me exactly what she saw, and she said triggers wide. And you see it now? Her smalls are below the large, which means that she doesn't actually have that first advantage of momentum. But I don't like to just say you did it wrong. Trina, what you did is you took a beautiful termination condition. You let your large chart show you that it's changing. And your small chart said, hey, Trina, all of your triggers are up. You're coming from multiple termination conditions. It's been a strong trending market. And you take a beautiful pullback right at an area and you found a way to capitalize on this area that could stop the market. Is it a high probability trend trade? It's not. But it's a good one. You will. Rashid, just understand that it's a marathon. And we're going to learn a little bit each and every day. But I promise you, you can post as much as you want in the room. You can ask a million questions. I encourage you to do it. And one of the things about me is I won't say, dag nabbit, Trina, what the heck were you thinking? I'll say, okay, this isn't exactly what you said it was, but let's look at all the great things that made this trade work, because this might become one of Trina's trades later. Trina, ask Wayne if there was an HVA line there. I bet there was. Do you want to see what you did, Trina? So, Fibonacci area stops the market. Small triggers roll. You bought a pullback right at the small triggers. In 2004, Nexgen was teaching people, Trina, that when Fibonacci support or resistance holds, allow the small triggers to roll on the large chart and buy or sell a pullback to them. This is what we call an edge trade. This was trade number 2 in 2004, 20 years ago. And you executed it flawlessly. Turns out you're pretty darn smart. And retro, which makes you pretty cool. But it starts with the termination. You did a great job identifying it. Then the small triggers roll. And then you buy a pullback to them. I mean, you did it great. It's a great trade. But it's not the trade you thought you were taking. So we talk about it. I like how you did it, though. I like how you did it. And Rashid, just stick with me. So one of the things we're going to do is we're going to teach you the rules, how to identify them, how to study them, where to study them, what they look like when they're met. And you're going to be able to scroll back historically on the software. And you're going to be able to circle these tails when the rules are met. And today might be too fast to trade it live. But if you do this, this is the pattern that I talk about every day. These two circles are pullbacks to areas inside a trigger. So this is all I talk about for an entire hour every morning. This is your trade. That's your pattern. Everything else, we're not going to worry about it until this becomes easy to you. Did anybody catch these, or is it just way too fast? It's way too fast. I don't think there's even reaction time. After a huge down morning, it looks like they're trying to rally back up, though. I'm looking at NASDAQ over on the side monitor, and it looks like they're trying to rally back up. We'll see if they do it. What goes down must go up, and what goes up must go down, guys. And it's this volatility that creates opportunity. It's been fun to grab the slow spots. Yeah. This is where, Wayne, when it's flying like this, if the rules are met, I think this is where that chili dog and having those quick profits Is that the ES? Just trying to take advantage of those quick momentum pops, maybe. Obviously, my rules weren't met, but even in a volatile market like this, gosh, it's just too fast to manage. Yeah, but it feels like that's the right day for it, doesn't it, Bob? I like what you did here. It's not the gap theory, technically. 71%. I like it. Bob up 2,300. So Rashid, there's money to be made. You just have to learn how to make it. That's what I'm here for. Almost the gap theory, except you didn't make the area. You didn't hit an area, Wayne. But the look is the same. When price accelerates away from those large triggers, and you show awesome patience waiting to get to the underside of momentum, and just back to the large triggers. Good stuff. The one thing I do, Rashid, and it's a little cocky, is I give you a checklist, and you'll get it. I mean, I'll put them all in here right now. This zip file has everything you need to be successful. But one of the things I do in this room is I give you a plan. And I give you a checklist for entering that trade that I just showed you a picture of. And it shows you exactly what the individual rules look like. And this is it for the new user. This is that up to 70 to 80% winner. And I teach you how to try to prove me wrong, if that makes sense. I teach you how to go back and study this and pick out these advantages and see this pattern. And I've had people trade this and nobody's ever done worse than 70%. And this is the most basic approach. So that's what we're going to do every day. I love it. Wayne, you're killing it, dude. Look how fast that market's going. 12 trades, 83% winners today. It's hard to have a bad day at 83% winners. Guys, remember when we talked about the dance on the 50-50 trades? That's it. That's the dance on the 50-50. The first one was perfect. And then it just goes down. And then eventually they break. There it goes. Does everyone see the termination condition that stopped the market cold? Divergence low, no triggers through. And look at the big untradeable bounce. I love it. You guys knew where that was. And look what's happening. No reason to trade into it. Right into resistance. Triggers didn't follow. No reason to trade into it. Even when the market is crazy. Guys, these numbers are good. I love it. I love it. It's so much fun. Resistance to the tick twice. Off of support. It's nuts. 3 divergences in the same price range. So you knew, guys, this is overwhelming. Holy shnikes, look at this market go. Watch what happens when you freeze the market, though. Things that we learn in this room. This is strong triggers. And when you have strong triggers, the market tends to push in the direction of those strong triggers. But each of these areas where the market bounced are what we call termination conditions. That's the second lesson that you get. And what happens is you learn how to avoid trouble and embrace advantages. That's all it is. This is from 25:12 to 27. This is 2.5 minutes, guys. And it is 26 points in the S&P. And the patterns work. Just got to be in tune. Look at that. Terminations again, guys. What do you guys want to talk about? Because I'm just going to keep being excited that the patterns work. Joel's got some for us. Thank you, Joel. 50-50. Missed your entry and get in late, and then you got stopped out just before support inside of triggers, Joel. But way to keep your head in it and easy money. So why was your stop here? That would be my only question. Is why would your stop be here? In the triggers. Well, no, I know why you entered here. Reversal bar prints. Where the retracement may go, where it's most likely to bounce. Do you see how your stop is 2 ticks above the entry? Does that make sense? Yeah. So when you get in on that confirmation bar, that's your stop. And you would have had to take this one twice, and you did. And I love that you took it twice. And it turns out to be a great trade. But this is one of the things. If I just prefer not to exit right at an entry. And you'll be different. Everybody will be different. And then great top. It's starting to roll. So after 3 divergences, you get in on the way down and it works out beautifully. Nice one. I like it. Great job, Joel. Wayne, everything is down. Chili dog, they give you a little retracement. Easy money. Great trade. Momentum and path. Joel, great trading. And then flying home. That's awesome. How loud is that with the window open? Is that really loud? You probably have the headphones, huh? That's so cool. Sound canceling headphones, right on. Area that might hold. I love that. It might not. So Joel, you don't have a termination because these 1-to-1s don't count. Don't have momentum. There is no divergence. Everything is below these areas, not a determination, Joel. I love that you got away with one here. By the time you enter, the large did roll. I don't know what kind of trade this is, and I don't know what that bar is confirming. But when you're to the left side of these small triggers, it's going to go up. And it did. Joel, how about weak triggers from the middle of nowhere? Trying to get back to the mid-band? I'm trying to come up with some sort of rules for this trade. Area that might hold is a rough way to trade. Area that has held is a better way to trade. And I love it. The market had been absolutely screaming down. And everything's below these key areas. It's a little aggressive. But it may work. Everything says down and you enter. And then you get paid at trouble, and I love that. 1, 2, 3 divergences, so you let it roll and you get in above, and there it goes. Entered a bit late, market play was going too fast, still make it to the fibs. Your rules are a little interesting, but one thing that you do have consistently is you have room to your targets. And there's a lot of small chart confirmation for the moves, Joel, and you're doing it really well. And let me show you what appears to be the premise, the basis for what you're doing. Is you're letting the small chart show you change and then just riding the momentum. And it's awesome. It's cool. I like the way you're doing it. How do you make it repeatable? That would be my question. Area that might hold, how do you make it repeatable? How do you feel good about taking this trade? Because you were in before divergence printed. So you didn't know that there was going to be a divergence yet. That didn't print until the next bar. How do you make it repeatable? You don't have to answer in the room, but that's one of the things that I'll ask you guys is how do you make it repeatable? How do you make it so you can do the same thing every day, so you can take those advantages every day? My goodness, look at this market. That's why we write on the charts. Three divergences. You get in, you get stopped out. You get back in, and then you get out late. So the fib held, looking for the three divergences. And they just wanted to come up one more time, didn't they, Joel? I like it. Starting to roll, everything's down. You got the gap theory, and it just didn't work. And it makes sense the way you did it. And then you say, but no, everything is changing and going down, and the trigger position is great. Let me try again. I like it. So you're taking large chart problems, terms, and you're forcing the small chart to confirm change. It's a good recipe. It's a good recipe, Joel. I like it. One off at the triggers. And then again, small chart change. Nicely done. The cool thing is I don't have to want to take your trades, right? I don't have to take the same trades. And Rashid, you don't have to trade like Joel, and Cab doesn't have to trade like me, and who knows who Wayne trades like, right? But you find your way. You find your trades, your patterns, your methods, and I'm telling you, study them like your financial life depends on it, and you'll be amazed at what you pull off. All right, 50-50 to the downside. Three divergences. All right, so this is where, Joel, I can finally find a discrepancy in what you're doing. Here's your third divergence, and you didn't get in with confirmation. Why not? That's okay. But do you notice how when your large triggers roll and your smalls get above, Joel? So this may be helpful for you. Three divergences is awesome, but letting that small chart change gives you a fighting chance to get up to trouble. So there's a good lesson. I love that you didn't take this one. Forcing the small chart, large triggers to roll creates a huge advantage for you. 50-50, not a strong top. all the momentum in the world, perfect entry, quick profits, divergence prints. You take 10 bucks on it. I love it. Great trade, Wayne. Getting in on the right side of the triggers is such a big piece of it. Let me share a picture. This is one of my favorite pictures, and this was drawn or created for a gentleman that came in the room, and he kept jumping in right here and just getting steamrolled. He's like, oh, it's a red fib, let me go. And he'd get run over, and then he'd take another and he'd get run over. And then he'd take another and he'd get run over. And then he'd take another and he'd get run over. And he's like, but all the triggers are below it. Resistance is supposed to hold. Guys, a little bit of patience. And Joel, this may help. And then I think Wayne said it too. If this resistance right here is really going to hold and stop the market, your large triggers are going to roll on the small chart. It has to happen. Your small triggers will get below. And what you'll find is that patience piece, that this price where you're hoping it holds is almost always the same price where your indicators tell you that it's held. That may be helpful with what you're doing, Joel. And there it is. Look at this. Where you hope it holds, large triggers roll, you enter it at the same price. Pretty cool, right? Who would have thought you'd get that same lesson? And it's all this nonsense in the middle that when you can avoid that with that little bit of discipline, pretty awesome. I like that. It's nice when it works out that way. When the lesson corresponds with exactly what you've shown me. Same thing. 3 divergences. Once the triggers roll and the small are below, it's easy. It's a lot less stressful too. And Joel, that's the perfect example, right? This is the area that could hold, and there it's held. Joel's teaching this class next week. He knows exactly what's going on. Nice stuff. And that's what you guys will find. It's just patterns. It's the same darn patterns every day. It's the same thing every day. 50-50 at the termination. We're probably going down to test blue fibs. And they did. And when you hit the blue fibs, every trigger line's above it. And you said, oh, I'll try to go up. I would disagree on the strong triggers because your smalls are down at this point. And your smalls are down on a failed 50-50, which is just about as powerful as your smalls being up from a termination. You have odds favorable momentum against the trade. A 50-50 just failed. And you're hoping that the blue fib stops it. And this is really no man's land right here. It could go down just as easily as it could go up here. Those are hard ones. And I couldn't even begin to give you a percentage expectation. Because there is no clear path up, but you had room to get back to trouble. Little bit taking a chance. But what's it confirming? So everybody loves to use confirmation bar. What's it confirming? If you don't have momentum or a clear path, if you don't have an area inside of triggers, what's it confirming? Your hopes that the market goes up. That's it, right? I think it's going to go up. That confirms that my hopes are validated. Compare that. Compare that to, hold on. Compare that to my indicators say up, my momentum is up, my path is there, I have an area for entry. I'm confirming that the market is doing everything that my indicators say. There's a big difference between confirming your opinion about what the market should do and confirming that the market is doing what your indicators say. Does that make sense? So what you really have is a reversal bar off support, but it's not confirming anything to be true other than your opinion. And your opinion's a good chart read. All your triggers are above support, and you did have room to get back to trouble. I'm not knocking your trade. And sometimes the lessons that I use your charts for, guys, are for everybody in the room, not just you, Joel. You clearly are in sync. You took the highest probability in a low probability scenario. Strong triggers, 50-50 trade. You take the Nexgen momentum trade, which is a snapback. And I like this. Man. Joel, I want you to understand that I'm not picking you apart to be an ass. But you didn't enter at a confirmation bar. You entered at what you hoped would be a confirmation bar. Because you didn't allow it to print. You got in on the way down hoping that it would be a down bar. Does that make sense? The same way you hoped this would have been a down bar, but it went up instead. I am the king. The king. I have a crown and a royal robe of trying to anticipate reversal bars and getting run over because a tick below my entry, it reversed and went up. So be careful. If you're waiting for confirmation, let it actually confirm. I wish I had a nickel for every time I'd done that. And this is a good example of that. I'm going to enter on a reversal bar, and I get in like right here. And then they're like, no, we're not going to give you a reversal bar. We're going to go up higher. And I feel like I've just got egg on my face. I'm like, oh, that was silly. That never was a reversal bar, was it? No areas inside of triggers. Good stuff, guys. It's been a good day. A lot of posts. NASDAQ's almost break even on the day. We'll see if they keep rallying up. Be nice to have a positive close, wouldn't it? Whew. S&P is running. Good stuff. All right, Joel, just post them all. We're getting towards the end of the room. If you have them, just drop them in. What blue fibs held? This one didn't quite get reached. There's your reversal. Okay, we were close enough, I would say. Divergence, divergence. I think that's your confirmation. And then it goes into the divergences. And you get in after the reversal bar. And it goes. Odds favorable, clear path, pull back to the mid-band. Joel, this is the one where I don't wait for confirmation. There's no reason to wait for a reversal bar. This is the perfect look, the perfect trade, the perfect entry. No reason to wait for confirmation when all your rules are met, right? You can if it makes you more comfortable. But that was the perfect trade. Odds favorable, 50-50. This is the momentum trade. Snaps right back. You don't know how low it's going to go, so you catch it on the way up. Easy money. Nice trade again, Joel. Fib holds. Everything says up and you hope it goes down. So Joel, I'm just going to say, and stop posting for a second and listen. Please, you don't have to, but it's been 3 divergences on the 10 prior. It's 1 divergence here for confirmation. And I'm only going to say this for a second because this is what I noticed. Now we're inconsistent. Now you've changed the rules. Odds favorable, strong bottom, everything says up, and suddenly it doesn't take 3 divergences in a trigger roll. Now it's 1 divergence and F it, I'm going down, right? It's a different trade. And it's not the gap theory because your large triggers aren't quite a full bar away. So just make sure you know what you're getting into. And the idea of the gap is the reason. But I point that out because we usually don't notice these things in the moment. And there we're back to consistency. 3 triggers, off the term, easy money. Joel, I'm going to respectfully apologize because you said gap, which is why you did 1. That's my patterns brain going sideways. It's aggressive, it's low probability, but you took it on the right side of the triggers, or the correct side of the triggers. Gosh, you're rhythmic. Trina, have a great day. Sideways, not much to do. I agree, Wayne. Joel, you've got a very definitive rhythm to what you're doing. Keep posting them if you got them. Keep posting them if you got them. Strong triggers directly into a termination, not a 50-50 because of the divergence high. Not a good bottom. It's a pivot from the middle of nowhere. But your small chart gives you an entry, and you take it up to the fib. Odds favorable, potential to break. That was your first entry. 2 divergences, you get in with confirmation, ride the momentum down. Nicely done. Oh, that's the same one. Weak triggers, clear path. You can't have weak triggers with momentum, right? That's the most delicious chocolate flavored strawberry cake I've ever had. It's weak. There is no momentum. But the area does hold, and you go down, and then 3 divergences, you take it off. But you can't have that. You can't have weak triggers but with momentum. Because triggers define momentum, and when they're weak, they're gone. Have a good one. So what you have is a clear path with weak triggers, and you get in when the market bounces off the fib with all the triggers beneath it, which is behaving as a termination. And you manage it beautifully. You're so aware of that small chart change. Termination. You get in on the correct side of the triggers and it works. Termination. You get in on the correct side of the triggers and it works. I see a definite pattern in what you're doing, Joel. You're in tune with areas that could stop the market, and then you're finding a way on the small chart to take advantage of it. Brilliant. You're still letting the large chart lead the way. In everything you've done, the large chart has told you to go to the small chart and look for an entry. The large chart has told you to go to the small chart and look for an entry. The large chart says go to the small chart and look for an entry. Over and over. Is this all playback? I love it. Dude, you are building a plan. And there's not a lot of discrepancy. There's not a lot of deviation. I thought there was that one time, but I was wrong. And sometimes I am. I love it. Dude, you killed it, Joel. This is how you get good at what we do. So, Rashid, if you're watching, all of these pictures that Joel's put in, this is your goal, is to just start taking pictures and tell me what you see, and we'll talk about all of it. And eventually, you're going to find your path. You're going to find your way, and it's all going to be based on patterns. Patterns repeat over and over in the market. And we're just learning how to capitalize on them. Good stuff, Joel. Don't follow Joel. Follow his study plan. Follow the way he studies. There's a path to get to where you want to be. Post in the room. Post everything you do in the room. And track your performance in the spreadsheet that I gave you. And eventually you take so many pictures, it's like the market slows down. You know exactly what you're looking for. So, great stuff. Guys, I think that's it for me today.